Hey everyone, this is Jay, also known as jaynemesis on eToro, where I trade as a popular investor. This is our weekly update for week 29 of 2018. Our weekly stats this week, we have a portfolio change of plus 0.55%, realized profit of plus 1.15%, and a total of 33 trades were closed this week. Top news, Augur has launched its mainnet. Augur is a project that I've been very passionate about for a long time. It was one of the first ICOs on Ethereum, and they successfully launched their mainnet. It was actually last week, so it was the week before the week that I'm reporting on. But there was quite a lot of news that week, so I kind of delayed talking about it until now. It's one of my favorite projects because I think it's something that's very, very achievable. In terms of a blockchain deliverable product in this kind of time period. So it's one of the first decentralized applications that I think has really got some legs and is likely to get some adoption. So I just kind of wanted to talk about it just very quickly and kind of explain what it is and what's cool about it, I guess. So basically, Augur is a decentralized prediction market, which means basically that you can go there, create markets to bet on, and you can buy shares in the outcome of different events. So you could buy shares saying who's going to win the next season of the Premier League in the UK, or you could go and buy shares in the outcome of elections, all sorts of things like that. Theory being that people will only bet on things that they have good knowledge of, which means that you can help use it to make predictions on things, hence the term prediction market. So Augur has been up for a couple of weeks now. It's already got several $1 million worth invested in different bets here and there. And you can go and test it out. You can go to the website augur.net and have a look around and, try it basically. Next up, Bitcoin has surpassed $7,500 and is heading up towards 8,000 as I speak. This is because of the hype around the ETF. So those of you that have been copying me for a while will remember the crazy swings we had in Bitcoin back in sort of March, April time last year, ahead of the ETF's decisions back then, where the SEC were basically deciding on if someone is allowed to create an exchange-traded fund, which is what ETF stands for Bitcoin. This time it's the CBOE who are applying for it. CBOE, as you probably are aware, are the guys that are running the big futures market for Bitcoin at the moment. They have a very, very good working relationship with the SEC. They're very transparent. They work with them on a lot of stuff. I'm pretty sure a lot of the guys that work at the CBOE are basically friends with guys from the SEC. So if ever there was a chance of an ETF being approved, this is probably it. And I think we can kind of see that from the market's reaction over the past few weeks as the news has started to trickle out about the ETF. So interestingly, they're working with SolidX, which is one of the three groups that applied for an ETF last year and were denied by the SEC. The main reason that the SEC denied, as far as I can remember, an ETF last year was basically around liquidity and the idea that potentially the market was too easily manipulated and things like that. So obviously Bitcoin has grown a huge amount in the last year, so it's looking more promising than it ever has. But again, we don't know. The SEC could just turn it down. But certainly it appears that the market is very, very bullish at the moment. It really thinks that this is going to happen. I still am remaining cautious. I still think we could head back down, from bounce off one of these higher levels at maybe 8,300 or so, and bounce back down to the 5-6K range and test it one more time. But it definitely seems like the sentiment has started to change around Bitcoin and around cryptocurrencies generally, but specifically Bitcoin. Is looking a lot more bullish at the moment as a result of the hype surrounding the ETF. So that's something that obviously is several weeks away yet, but we're going to kind of keep an eye on it, and I'll feed you guys some updates as it develops basically and see how it goes. Finally, earnings have begun. So we have Netflix and Microsoft were the two first companies to report out of the ones that I really, kind of follow and care about. Netflix, first of all. So I did write a little kind of follow-up report on my thoughts on this, actually. There were a few interesting points. So first of all, Netflix did miss their target and they were slightly under. It's the first miss they've had in over a year on their quarterly earnings. So not great, but by no stretch of the imagination is this something that's really majorly concerning me. It dropped by around 5% or so, and I do still have a lot of positions in Netflix, and I did keep most of those positions open ahead of the earnings report as well. I only closed 2, I think, but I did do some nice trades off the back of it, as you'll see later on. In terms of the actual content of the report, so I think the main thing that really caught my attention during the Q&A basically was the avoidance from Netflix to really answer questions around what's going to happen with the content from Disney and how much of an influence that has on the platform overall. So if you're not aware, Disney are working on their own Netflix style system basically. And they will obviously have a lot of content because they're Disney. They're recently acquiring Fox and all the rest of it. But there's still a lot of content on Netflix that's created by Disney, including content that's actually exclusive to Netflix even. And when asked about it, Hastings didn't really give an answer. Like, they directly asked effectively, how much content on Netflix is consumed that is, potentially going to be lost to Disney. And he basically just didn't answer, and they kind of refused to expand on it or give any numbers behind it, which is a little bit odd and mildly concerning, because you would think if they were really confident and really not worried about the impact it might have on Netflix, that they would happily release those numbers and say, 6% of users watch stuff by Disney or whatever it is that they would say. But instead they actively avoided saying anything to do with it, which again, not great news, but certainly I don't think it's something to worry about too much. They did say that the deals they already have in place with Disney for their content is up to them to cancel with the contract, so Disney can't just pull it away from under them. But just something to bear in mind, I guess. For Microsoft, Microsoft had a good earnings. They came back. The market was up by around 4 or 5% again. So the opposite of Netflix. Again, like Netflix, it was one of my larger positions, so I had quite a lot invested in it. I actually did a few trades before the earnings report. I thought it was going to be good. The three big areas that kind of made a good profit for Microsoft and really kind of carried it forward were LinkedIn, Office 365, and of course Azure. So all three of those products are, pretty much the things that I tend to focus on, not so much the Office stuff, but certainly Azure and LinkedIn are definitely two of the major reasons that I'm still invested in Microsoft. And I'm happy to stay invested with them moving forward. I think they've done amazing work with Azure recently, kind of catching up with likes of Amazon, surpassing Google, and a few other competitors along the way. And of course, LinkedIn is actually something that I used to trade loads before it was acquired by Microsoft. So it was really good to see that the big investments that they've been putting in, because they've been plowing money into LinkedIn, have really actually benefited Microsoft and have come back with some good returns. And it really does feel like LinkedIn is, unlike Facebook, not really suffering from losing users. It's still growing pretty strong. So overall, pretty happy with that. In fact, I think it was 525 million users they said they have on LinkedIn now, which is a lot of people. So everything in Microsoft's going really pretty well at the moment. Another thing that's interesting, it was mentioned a while ago in the news, Microsoft are in the process at the moment of acquiring GitHub as well, which, if you don't know, is pretty much like the repository for code for most major projects around the world, especially open source stuff. So it's an interesting move. They specifically said during the call that they do not plan on trying to monetize it or turn it into something. Effectively, they're buying it almost as a defensive strategy for the overall internet market, I guess, for software developers everywhere. And effectively hoping that by doing that, they kind of get a bit more favor from developers, and developers are more likely to think of Microsoft in a nice way. I guess that's their strategy. That's kind of what I read from it anyway. So that's basically it for that. There's loads more earnings coming up, but I'll talk about that later on. On to the cryptocurrencies. So I did actually do a couple of trades in Cardano, I think, but I didn't include them in this report because it was really nothing all that exciting. No big profits or losses either way, just sort of refreshing trades and trying to make a small bit of profit. But the big ones are, of course, EOS and Bitcoin. So a couple of trades in EOS where I was buying the dip when it dipped back down to the low $8 and even below that into the $7 range. I opened a couple of positions. I closed them for, I think it was around 6% profit or something like that, just under $8. It was actually just before the market bumped up by another couple of percent. So that was a bit frustrating. But again, we made some good profits, so I'm kind of happy with that. Bitcoin, I've been trying to benefit from the rally that's been taking place over the past week or so, without keeping my exposure too high to it. So I've kind of taken profits out a couple of times along the way, and then even then reinvested it again at basically the same price, but just removing our exposure from it effectively. So it's worked pretty well so far, I think. I don't think I've really missed any of the price jumps in Bitcoin, but I have effectively saved us from the risk of it going back down. Importantly, Bitcoin's at a really, really important stage at the moment. It's just broken out of the long-term downtrend line. What I'm really waiting for is effectively confirmation of that, and seeing like 2, 3, 4 daily candles staying above that long-term downtrend. So hopefully that goes fine. I'll actually post a chart to show you the downtrend and where it broke out of it on a daily chart in the comments to the post on eToro. So if you want to see it, I'll put it in there, and I'll see if I can put it up on the Wix article as well. Okay, stocks. I closed quite a lot of stock positions over the past week, so I'm going to try and rattle through these at a reasonably quick pace. First of all, Sony, it was really pretty much just a refresher of the position. The position had been open for a while. It was sitting in a small profit, so I just closed it, waited for the price to go back down again, just a small amount, and then reopened it again. That's pretty much just to make sure that anyone who's been copying me in the past couple of months gets exposure to that position. So, nothing really to scream and shout about, just a refreshing of the position. Microsoft, as I said, a couple of trades around earnings, nothing spectacular, but some good healthy trades with pretty low risk, basically day trades. I think one of them was like 4 days long and the other one was like 2 days long. So yeah, pretty good trades, pretty happy with that. Shopify. So these are, again, pretty interesting kind of profit taking trades ahead of the entire earnings period, just sort of trying to protect some of the money that I've made from it. So as you may be aware, Shopify, like Square and many other companies in that kind of space, Etsy, IBM, Etsy and Wix has benefited a lot over the past couple of months. So I closed a couple of positions at 19% plus profit, and a third one that I think was around 6%. I can't remember to be sure, but still very happy to hold some Shopify. Still have a few positions open, but just kind of protecting some of our profits for the moment. Twitter. So yeah, I've been trading Twitter around a little bit with some of the volatility that's been going on, ranging between like $43 and $45. Just a few small trades, basically day trades, for around 1% each. IBM. So actually, I just kind of saw a nice opportunity to trade it following their earnings report. So I just kind of jumped in for a couple of hours on a trade, 0.7% profit. It doesn't seem like much, but these little trades do add up. I know that for some of you guys, these trades look tiny. You're making like $1 or $2 or something, but trust me, like every little trade like this really does add up, especially when you're talking about such a small time period. There's basically like no real risk involved in holding something for such a short period of time. I shouldn't say no risk. There is always a risk, but the risk is really minimalized by how long we're holding it for. AMD. So AMD, they've actually got their earnings report coming up this week. I only have one position open at the moment. I've been kind of just sort of trading in between like the $16.80 kind of range with a couple of trades. So some small profits of less than 1%, but pretty happy with that. And I'll probably try and keep 1 or 2 positions open going into their earnings, because they tend to do well in earnings, but one thing I've noticed is they tend to drop off very quickly after the earnings report, even if they do well. So I'll certainly be trying to, I think, unload the positions again straight after the earnings, unless there's something spectacular that happens. Etsy. So Etsy has been benefiting from the death of a competitor. There was a German website that I cannot remember the name of. Actually, someone else posted this on eToro, which is how I found out about this news. And they went under, and they basically passed all of their users over to Etsy and told everyone, "Hey, go over to Etsy instead, because we're not working anymore effectively." But yeah, a couple of trades closed. I think it was only one trade closed there. Their earnings are coming up, so I'm pretty bullish on Etsy actually over the long term. I think they've really kind of got a nice niche in the market, and they seem to kind of attract very, very loyal customers. So Yeah, I'm looking forward to actually listening to some of their earnings calls because I've not really traded Etsy too much. I've only just kind of dove into it recently, but it's a website that I'm very aware of and I've used multiple times and stuff as well. So I'm interested to see how that works. I'm hoping to make this something that I trade pretty regularly. Next up, we have Square. So Square is probably my largest stock position at the moment, if I remember right. Had an amazing year, up over 100% this year. I've taken some profit from a few trades, but we're still pretty heavily exposed on there. Somewhere around, I think somewhere around 5%, maybe even more, maybe even up to 10% of the portfolio is invested in the Square at the moment. Probably not as high as 10, but yeah, I'm very bullish about their earnings report. I actually think the crypto stuff is really quite important for Square. It definitely feels like they're just sort of enabling people to have access to it. It's very much like the implementation that Revolut did into their app on their for their card as well. Same sort of thing where it's just something that people are using anyway, and they just sort of see Bitcoin and buying cryptocurrency as an option there, and they just kind of do it because it's there and it's convenient and they trust it. So last time it was $36 million worth of Bitcoin that was purchased through Square. So I'm looking forward to seeing what that number is during this earnings report. I think Square, from their last earnings, again, they talked a lot about cryptocurrency and how they want to work with it going forwards and how they've got a team dedicated to kind of researching it and figuring out what they're going to do with it. So it should be an interesting call from that perspective. And again, I think Square, like Shopify, Wix and such, are in just a very good position in the market at the moment as people are kind of moving away from the likes of Amazon somewhat, I think. Okay, we're almost there. There's a lot of stocks to go through. Netflix. So Netflix, my most traded of the week. I think I actually did 2 short trades this week on Netflix as well as longs. Basically, just trading on the volatility straight after their earnings report. I listened to the call. I understood what was going on. I made actually a prediction on Twitter and on eToro before the market opened of what I expected to happen, and it more or less played out exactly like that. So I don't think I executed the trades perfectly, but we did make some good money. Basically just trading on the volatility following earnings, and I'm pretty confident that Netflix is going to return back up to those highs again, probably by the time the overall earnings period is over. So maybe mid August to late August. So I'm pretty happy with how that's been going. Next up, Google. I did 1 trade on Google. It was really nothing special, just kind of building on, taking advantage of the hype that was building towards their earnings for a quick 1% profit. Wasn't really too willing to hold it through earnings, although I kind of expected that they would probably do well. I didn't have the same confidence that I did with Microsoft, for example, so I decided not to hold anything through there. But hey, we made 1% anyway. Finally, we have Tesla. So I closed my last remaining position of Tesla almost exactly at break even, which is a bit of a shame. But I just feel there's so much stuff going on with that at the moment. The thing that actually really made me decide to close the position was the tweet from Elon calling one of the divers that saved the kids in Thailand a pedophile on Twitter. I genuinely don't understand what he was thinking when he did that or why he did it, but I think it's hurting his reputation, and as a result hurting Tesla's reputation. And it's not the first instance of something like this recently. So I don't know if the stress is getting to him or what it is, but he's acting weirdly, and I think it's dangerous for Tesla because Elon Musk is so synonymous with Tesla, so heavily associated with Tesla. People think of Tesla, they think of Elon. People think of Elon, they think of Tesla, and so his actions really have an effect. And that was actually pretty much played out on the day that I closed the position, because clearly I wasn't the only person thinking it, as the stock dropped by around 5%. And since then, it's actually dropped by a further 5%, following rumors about problems with suppliers and people canceling orders of the Model 3 and all sorts of things like that. I think it's going to be a very, very important earnings season for Tesla. They really do kind of need to prove themselves a bit at the moment. And I just don't think it's really worth the risk of holding on to the stock at the moment. So I'm just kind of staying out with it. I'm not going to short it or do anything crazy. I'm still following it, but I just think that right now is a bit of a risky time to be holding Tesla stock. So that brings us nicely to our realized trading statistics for the week. 33 trades closed, 33 profitable. That's what I want to see. No unprofitable trades were closed. Even that break-even trade, I'm pretty sure was like 0.01% profit. So I guess, you get like a free cent or something, depending how much you invested. Average trade profit plus 4.16%, which is very, very good. Very happy with that. Average trade loss is obviously not applicable because we didn't make any losing trades. And the most traded was Netflix with 6 trades. Total profit of 1.15%. Performance, July obviously now pretty much coming to a close. We've got, just around about a week left of July. But plus 6.92% at the moment. Again, I'm pretty content with that. It's not amazing, but it's pretty good. Again, just to reiterate, my target for each month is around 5% profit. So 6.92 is pretty good. Obviously, this isn't realized. This is the actual performance. This is the portfolio as a whole. So if the cryptos fall off a cliff next week, then that will hurt. But it's a nice result, and hopefully we're moving in the direction we need to turn this year around and get some profit coming out. Certainly the people that have been following me for the past month, 2 months, should all be in green, I believe. So hopefully, touch wood, we can keep that up and keep it going. As you can see at the bottom, week 27 was a killer week for us. I think there's a good chance of having a couple more killer weeks if Bitcoin goes ahead and does well with the ETFs, and if we have a good earnings period. The next 2 weeks are really busy for earnings, so hopefully we can bring this momentum forward into August and make some good profit. What is coming up? That's the next question, I guess. If we look forward, we can see, obviously, as I've mentioned, there are loads and loads and loads of earnings coming up. I'm trying to remember off the top of my head what else is coming this week. I think we've got Wix and AMD on Wednesday. I think Twitter is towards the end of the week. I think there's another one as well. Maybe First Solar, someone like that is in this week as well. Next week, we have a whole bunch more. I think there's about 5 earnings reports next week. So it's going to be really, really busy. I may be a little bit quiet because I'm kind of digesting them. I'm hoping to digest them quickly and just kind of release another quick update onto eToro like I did for Netflix. I've actually almost finished writing the one for Microsoft, so maybe I'll release that later tonight if I get it finished. But it's not as interesting as Netflix, really. It's a bit more, it's a much drier report, so there's not too much to read into it, I don't think. But regardless, I'll probably push that out as well for those of you that are kind of curious as to my thoughts on these companies and the broader perspective of where I think they're going. Apart from that, I guess the ETF is the other big thing. Waiting to see what happens with the ETF. There have been loads and loads of comments given to the SEC. It'll be interesting to see how it turns out. I think we are at the point where a Bitcoin ETF almost needs to happen because the market appetite from the 401ks and things like that to have access to this market is really, really substantial now. And we actually, even in the past year, we've come a long way in terms of trust and regulation and the kind of entities involved and exchanges involved in this. Even the liquidity, which, as I mentioned earlier, was the big problem back in the time, has really changed. So I think there is a reasonable chance of the ETF going through. And if it does, I think that can only really be good news for the overall market. Cool. So that just about does it from me, guys. Thanks for watching again, and I will see you guys next time.